Atlanta, Whittier, El Centro, California, Houston, Bakersfield. Um, una pregunta, ¿el Zoom es en español o en inglés? El día de hoy lo vamos a hacer en inglés. Today's presentation will be in English, and stay tuned as we set up more of these webinars. And yeah, if you actually get our newsletters, we also announce them there. So if you follow us on our social media platforms, let us know how you heard about this event. I think we also would like to know. But welcome everybody that's coming in.
And if we have time at the end and you have a question, please use the Q&A box.
All right, think we're connected as well. Okay, yeah, we're connected on Facebook Live as well, and YouTube and LinkedIn. So we're live everywhere. Good morning from the Bay Area. Latino Tax Fest. Yeah, we're still recuperating from Latino Tax Fest. Hopefully everybody that attended had a great time. Uh, yeah, we're planning next year already. So, Luis Parra presente. Buenas tardes, señor Parra. Yeah, tardes para usted. Good morning. Good morning, everybody. And we're about a minute out as we give everybody a chance to settle in. Cool. All right. So, if you're ready, Mr. Lopez, we can get started. Hopefully everybody's ready. Um, Good morning, everybody. My name is Vicente here with Latino Tax Pro, sales manager, and today we have our CEO, Carlos Lopez, talking about that one big, beautiful bill that just got passed a few weeks ago and what it means for you as a tax professional. Mr. Lopez, for those that don't know you or have heard about you, would you mind introducing yourself?
Yeah, hi everyone. My name's Carlos Lopez. I'm an enrolled agent and I'm the CEO and founder of Latino Tax Pro. And we're here to share our knowledge, not with just Latinos, but with everyone. Everyone who serves the Spanish speaking or Latino client. We're a all diversified group. We're not just exclusive, we're inclusive to everyone. So please feel free to share our information. Today's presentation, there will not be any CE credits for it. We'll let you know when there will be CE credits. This thing is so new, and we'll see what happens. But there will be more available as time goes on.
Awesome. Thank you, Mr. Lopez. And for everybody that's tuning in, whether it's on the social media platforms, Zoom, YouTube, or LinkedIn, whatever platform you're in, we're going to be answering questions at the end. For those that are in the Zoom platform, please use the Q&A box. The chat box is cool, but the questions get lost and we can't see them. So use a Q&A box so we can answer them in social media. We'll try to get to them as quickly as possible as well. Without further ado, Mr. L, screen is yours.
Thank you, Vince. I'm trying to get it to, oh, there we go. Okay. So what's in the one big, beautiful bill? Congress has passed its next major spending bill. From tax reform to shifts in healthcare, immigration, and SNAP, which is a supplemental nutrition assistance program, this legislation will likely affect you or your clients. The bill was negotiated through a process called reconciliation, which Congress can use to change laws that affect the country's budget. The process limits debating to 20 hours, eliminates the possibility of a filibuster, and it means the bill can pass with a simple majority of 51 votes instead of the supermajority of 60 votes, typically needed to avoid a filibuster. And that's how this bill got passed. So the following presentation is going to go over all the provisions that affect our 2025 taxes. And the OBBBA contains hundreds of provisions. It's almost 1,000 pages. So in today's short presentation, we're going to highlight the most critical updates for tax professionals. Some of these will permanently extend the individual tax rates from the 2017 TCJA Act. And the OBBBA also includes several temporary tax deductions, with many of them expiring in 2028. Some clean energy tax credits that were included in the IRA were phased out, not to be confused with the individual retirement account, but the Inflation Reduction Act of 2022. So today's course is an overview of selected tax provisions. We will be presenting a lot more updates as they become available. Look to us, look here to Latino Tax Pro for new tax forms and tax changes soon to come. Y vamos a tener presentaciones en español. So here are some selected tax provisions of H.R. 1, which is actually the legal name of the bill. So Section 70101 makes permanent the individual tax rates as under the 2017 Tax Cuts and Jobs Act, TCJA, for years after 2025. Section 70102, for 2025, the standard deduction is increased from $15,750 for single married filing separate, $23,635 for head of household, $31,500 for married filing joint, and these will be adjusted by inflations for the years after 2025. Section 70103, this is new. This extends the elimination of deduction for personal exemptions 2 years after 2025. This adds in the Internal Revenue Code 151 to provide an additional $6,000 deduction for seniors age 65 or older, excuse me, for years 2025 to 2028, whose modified adjusted gross income doesn't exceed $75,000 for single filers, $150,000 for married filing joint. The deduction is phased out for 6% of the magi over these amounts. Social Security numbers are required to qualify. Now you're going to wonder why is the $6,000 additional deduction for seniors? Well, this is a substitute for Trump's campaign promise that Social Security benefits wouldn't be taxable to seniors. So you see what they did was they increased the deduction, either married filing joint or single filers, by $6,000. That's how they did it. Section 70104, this makes permanent the child tax credit provisions of the TCJA, except increases the amount of $2,000 to $2,200. $1,400 is refundable for 2025. And this is also to be indexed for inflation after 2025. This amends Internal Revenue Code 24 to require that the child's Social Security number be listed on the return to be work eligible. And if the child is married, the child's spouse Social Security number must be listed on the return. Section 70105, this is the Internal Revenue Code 199A. Some of you may have recognized that as the QBI, Qualified Business Income Deduction. This makes permanent the business income deduction created by the TCJA for years after 2025, increases the taxable income limitation from 50,000, that's 100,000 for married filing joint, to 75,000 or 150,000 for married filing joint. This provides a minimum $400 deduction for active business income of 1,000 or more to be indexed for inflation for years after 2026. Section 70106 increases the basic estate and lifetime gift exemption amount of Internal Revenue Code 2010 from 5 million to 15 million, effective for decedents dying in years after 2025, to be indexed for inflation for years after 2026. Section 70107. This makes permanent the AMT exemption and phase out thresholds of the TCJA 2 years after 2025. Section 70108 makes permanent the 750,000 limitation on acquisition of personal residences indebtedness acquired after 12/15/2017, 2 years after 2025. So this did not help California or New York. Section 70109, excuse me, makes permanent the provision of the TCJA that only personal casualty losses that resulted from federally declared disasters are deductible for years after 2025. Section 70110 makes permanent the provision of the TCJA that eliminates miscellaneous itemized deductions, adds that to unreimbursed expenses of educators, as defined in Internal Revenue Code 62, effective for years after 2025. Section 70111, this makes permanent the elimination of the reduction of itemized deductions, the P's limitation, for years after 2025, and replaces it with a new reduction equal to 2/37 of either total itemized deductions or taxable income exceeding the 37% tax bracket, whichever is lesser. Thank God for software. So how many times have you been preparing a client's tax return, and even though you're adding in more itemized deductions, there is no more additional tax credit? That's because the P's limitation limits out how much itemized deductions your client can take. So this was extended. Section 70112 eliminates the bicycle commuting reimbursement exclusion for years after 2025. Now, honestly, how many of you out there knew there was a bicycle commuting reimbursement exclusion? Well, guess what? It's been eliminated. So, but if your clients find out about it, it's true. And it does add inflation adjustment for exclusions for other fringe benefits. Section 70113, this makes permanent the elimination of the deduction for moving expenses by the TCJA, except for active duty members of the armed forces and for members of the intelligence community, effective for years after 2025. Section 70114 makes permanent the elimination of the deduction for wagering losses by the TCJA, except to the extent of wagering winnings, limits the deduction to 90% of the wagering losses, effective for years after 2025. That's a big one there. Section 70115-529, you may recognize that. It's part of the 529 plan. This makes permanent the deduction under the TCJA for contributions made to able accounts for years after 2025. And of course, the able accounts are tax advantage accounts for qualified disability expenses. Section 70116 makes permanent the TCJA provision for years after 2025 that allows beneficiaries who make contributions to able accounts to qualify for the saver's credit. Section 70117 makes permanent the TCJA provision for years after 2025 that allows a tax-free rollover from a 529 account to an ABLE account. Section 70118. This permanently lists the Sinai Peninsula, Kenya, Mali, Burkina Faso, and Chad as hazardous duty areas for armed forces personnel. Section 70119. This increases the limitation on the itemized deduction for state and local taxes, SALT, on the Schedule A for 2025 only from 10,000 to 40,000. So it was a $30,000 increase, $20,000 for married filing separate. So this really helps out states that have a lot of property taxes, New York, California. But it gets phased down to 10,000, 5,000 for married filing separate by 30% of the modified adjusted gross income over $500,000 or $250,000 for married filing separate. The deduction and the MADGI limitations to be increased by 1% of each year for years after 2025. No restrictions for pass-through entities. Section 70201, here's a new one. This is the one a lot of people have been talking about. This provides above the line deduction for qualified tip income for years 2025 to 2028. So this is for 3 years. It limits the deduction to $25,000, phased out for 10% of your modified adjusted gross income over $150,000, $300,000 for married filing joint. So it does get phased out if you pass these floors. Now, qualified tips must have been received by an individual in an occupation that traditionally and customarily received tips before 2025. So I'm just saying this as a friendly reminder. The wages you pay your preparers are not tips, okay? Because it's not traditional and not customary to pay your preparer tips, all right? And the tips must be paid voluntarily by the customer. There are some places where they'll automatically take out tips. Well, technically, those aren't tax-free. It has to be paid voluntarily by the customer, and the business must not be in a specified service trade or business per IRC Internal Revenue Code 199A. That's the QBI code. A work-eligible Social Security number is required to claim the deduction. This also expands the FICA tax tip credit to beauty service businesses. So there are some qualifiers around it, but it's pretty reasonable. I think for most workers that do get tips, especially in the food industry, in the entertainment industry, housing industry, you're going to still be able to get some tip exclusion. Another new one, this is another one that everybody's been asking us about, 70202. This provides above the line deduction for overtime pay. Okay, not including tips. So they're not going to include them for years 2025 to 2028. This limits a deduction to $12,500, $25,000 for married filing joint. Does get phased out for 10% of your modified adjusted gross income over $150,000, $300,000 for married filing joint, and a work eligible Social Security number is required to claim the deduction. So there you have it, folks. There's your overtime pay that is now excluded from income tax. I'm not sure if it's going to be deducted or not counted or limited for Social Security and Medicare tax. We'll find out. Okay, section 70203. This allows above the line deduction for years 2025 to 2028 for up to $10,000 interest paid on the purchase of a passenger vehicle whose final assembly was in the U.S. The deduction is phased out for 20% of modified adjusted gross income over $100,000, $200,000 for married filing joint. So I'm not sure yet if this is applied to those who itemize or if it's going to be not, it doesn't need to be included in the Schedule A. That's something new that we're going to look into. Here's another new one, 70204. This creates a tax-exempt Trump account after 2025 that a U.S. citizen parent may open for a child less than age 8 who has a work-eligible Social Security number. Contributions up to $5,000 annually allowed. Up to 50% of distributions after age 18 may be used for higher education, training programs, small business loans, or first-time home purchases. Other distributions taxed as capital gains provides for a $1,000 tax credit to the parent or parents for each qualified Trump account opened. Section 70301 makes permanent 100% bonus depreciation for property acquired after January 19th, 2025. Here's a new one, 70302. This allows domestic research and experimental expenses to be expensed rather than amortized, effective for years after 2024. Taxpayers may elect to amortize over 60 months foreign research and experimental expenses, must be amortized though over 15 years. Small business taxpayers with an average annual gross receipts of 31 million or less may treat change for years 2022 to 2024 as a change in method of accounting to be expensed over 1 or 2 years. Now, I know that sounds like a lot, but it's under 31 million. And when I first started, I had several small businesses. Their gross receipts were all that great. But through the years, what happens, it slowly increases. And pretty soon you'll have clients like that. Section 70303. This increases the cap on the deductibility of business interest expense for years 2025 to 2029 by allowing adjusted taxable income to be computed without taking into account deductions for depreciation, amortization, or depletion. Also allows trailers and campers designed to be towed to be treated as motor vehicles. So that's interesting. Section 70304. This makes permanent for years after 2025 the TCJA credit for paid family and medical leave and expands eligibility for this credit. Section 70305 eliminates the 50% limit on deduction for meals provided on fishing boats and in fish processing facilities, effective for years after 2025. So if you've got fishermen or you've got clients that own a fish processing facilities, there is no more 50% limit on the employer providing meals for his employees or her employees. Section 70306, this increases code section 179, expensing limitation to 2.5 million, reduced by the cost of qualifying property over 4 million, effective for years after 204. I know once again, this sounds like a lot, but I'll tell you, when I first started, I didn't have clients with $2.5 million of equipment, but through the years, I was able to get some farming clients, some manufacturing clients who did buy a lot of equipment, and I was able to use some of these thresholds. Section 70401, this permanently increases the employer-provided child care credit. Okay, this is important for businesses that provide child care. Okay, it creates a separate credit amount for qualified small businesses and indexes the maximum credit amounts for inflation, effective for years after 2025. So be sure to remember this when your business clients come in and they're providing child care credit, employer provided child care credit, it does increase that amount. Section 70413, 529. This expands the list of expenses that a 529 plan may reimburse, effective for distributions made after the enactment. Section 70414. This allows amounts in a 529 account to be spent on qualified post-secondary credentialing expenses in connection, now this is important, with recognized post-secondary credential programs and recognized post-secondary credentials, effective for distributions made after enactment. So this is good. This is good for those that are becoming teachers. Section 70424. This creates a permanent deduction for non-itemizers for years after 2025 for cash contributions of up to $1,000 and $2,000 for married filing joint. Section 70431 modifies the gain exclusion for the sale of qualified small business stock to a 50% exclusion for stock held for 3 years, 75% exclusion for stock held more than 4 years, and 100% for stock held for 5 years or more. Also increases the dollar cap to $15 million, $75 million for corporations. Index for inflation after 2026. Effective for stock acquired after the date of enactment. Section 70432. This is a good one here. This reinstates the requirement for filing a Form 1099-K to the law that was in effect prior to the American Rescue Plan Act of 2021, unless the taxpayer has earned more than $20,000 for more than 200 transactions, effective for years after 2024. As you can see, this was designed for the crypto traders. Section 70433, this increases the threshold for filing a Form 1099. Now, this is important also, from $600 to $2,000, effective for years after 2025, to be indexed for inflation for years after 2026. Now, 70501, this eliminates a tax credit for previously owned clean vehicles, effective for vehicles acquired after 9/30/2025. Section 70502 eliminates a tax credit for clean vehicles, effective for vehicles acquired after 9/30/2025. Section 70503 eliminates a tax credit for qualified commercial clean vehicles, effective for vehicles acquired after 9/30/2025. Section 70505, this expands the list of expenses that a 529 plan may reimburse, effective for distributions made after the enactment. Section 70506 eliminates a residential clean energy credit. For example, the credit for solar panels. This was a great credit. I'm sorry to see it go. So it is effective for expenditures made after 12/31/25. So time is running out. 70508, this eliminates a new energy efficient home credit, effective for new homes acquired after 6/30/26. This was another great credit. A lot of my clients got it. So tax planning tip here, let your clients know that a lot of these energy efficient credits are going to run out. Section 70601, this makes permanent the limitation on business losses for non-corporate taxpayers, provides that business losses disallowed in years after 2024 are to be taken into account in subsequent years, effective after 2024. Section 70602, this codifies the treatment of payments to partners for property or services that currently applies under regulations effective upon enactment. Section 70606, this provides for penalty for a promoter who aided and abetted the understatement of tax liability due to the Employee Retention Tax Credit, the ERTC. Also provides that notwithstanding Internal Revenue Code 6511, no ERTC will be paid unless the claim was filed by 1/31/24. Also provides that the statute of limitations on making assessments under Internal Revenue Code 3134, such as for additional tax owed by improperly deducted wages, is 6 years, and this is effective upon enactment. Section 70607, this adds a social security number requirement for students and taxpayers for the American Opportunity Credit or the Lifetime Learning Credit, and this is effective after 2025. Section 70608, this directs the Department of Treasury to issue a report to Congress within 90 days of an enactment on a plan to establish a public-private partnership for free filing of tax returns. Yeah, this affects a lot of us that are in the pay for preparing returns. So now the Department of Treasury says, if you're going to do this, you got to provide your report within 90 days. Section 71301 makes aliens not legally present in the United States ineligible for the premium tax credit effective after 2026, and that is for the Obamacare. Section 71304 prohibits individuals from receiving premium tax credits if they enroll in health coverage on the exchange through a special enrollment period associated with their income effective for plan years after 2025. Section 71305 removes the repayment limit and requires affected individuals to reimburse the IRS for the full amount of the excess tax credit received effective after 2025. I want to thank all of you for being here today. I see that a lot of questions did pop up. This presentation is available, will be available, or probably already is. I think Vince has it on there. And most certainly, please take it, print it out, review it. Also, we are going to do more of these. Like I said, vamos a hacerlos en español también. And we are, as things come up, as forms become available, as more, of these regulations become clear. I mean, this is just a brief preview of what just came out just a few weeks ago. So we want to make sure that all of our community, that you're all updated. We want to make sure that everybody knows what they're doing and that Latino Tax Pro is the place to go if you have questions. So
Yeah. Thank you, Mr. Lopez, and thank you everybody for tuning in today. Everybody on social media, thank you for hanging in there. Um, yeah, we will. This is recorded. You can find it on in any of our platforms, whether it be Zoom, YouTube, or LinkedIn. But we're gonna send out an email to everybody that registered. Whatever email you used to register, we're going to be sending it out to that specific email. And we're going to send you the YouTube link so you can check it out later. Any questions? So yes, everybody that's been asking those questions to get them emailed, you got it. Absolutely. We'll take care of that today. You're going to receive a copy after we're done with this presentation. Mr. Lopez, can you see the questions?
I
Yeah, right?
can.
Yeah. Okay. I was trying to answer them as quickly as I could as well. So thank you. There's been a lot of great questions. So one of them we have here, is there going to be a specific line on W-2 for overtime?
I believe there will be because how else could employers tell the difference? So yeah, look for that. Now
Yeah,
remember, we don't know yet because we haven't been given it. But logically speaking, I think there will be. So look for that.
awesome. Yeah, we're getting a lot of thank yous. Thank you,
You're
Mr. Lopez.
welcome.
This was very helpful for us tax
Thank you.
preparers. Thank you for joining us today. So we have a few more minutes.
Yeah.
So the next question is, so from July 4th for restaurants, does that mean servers and waitresses don't pay tax 20% for tip charges anymore, or servers and waitresses will get tax returns for tip charges at the end of the year?
Yeah. Like I said, we don't know the forms yet and how they're going to flow, but there's going to have to be some way for the employer to, parse those tips out from your other way pay. But they're already parsed out as it is right now, and I'm sure most payroll software companies are going to be sure and separate those out.
Awesome. And then we have another question. What is he just stated regarding the 1099 from 600 to 2000?
Yeah, that's a federal change. So you have to remember a lot of states do not conform to federal changes. So we're going to wait and see on that one.
Mr. Lopez, a quick can you move your question box
Oh,
to your right or left? 'Cause it's blocking the number in case people want to
oh,
call us in.
how's that?
Uh,
I'll move it over here.
yeah.
Okay.
Okay. Yeah. Better. And then it says is this pertaining to the form 5695? Might have been one of the slides behind. Here's a good one. What will
Okay.
happen to the solar credit that was being carried forward that wasn't used up in 2024?
Yeah, I believe now. So remember, this is we don't know yet for sure, But if it's being carried forward, I think it's going to continue to carry forward. I believe what the law is for new credits.
Now, what does it mean, the ERC changes?
Okay. Yeah, the 5695 are energy credits.
Mhm.
So that's the form that's used for energy credits. Okay, what does it mean to the ERC changes? They're no longer accepting ERC credit applications. And there's some severe penalties if they catch fraud on applications that have already been turned in.
Cool. And then the next one says 1099, 600 to 2000 is business accounts, correct?
It's any kind of business transaction, you know.
Oh,
So it's anything that relates to, it's not personal, it's business.
perfect. It says, Claudia says, thank you. Great presentation, Mr. Lopez. We
Oh,
appreciate your time.
thanks, Claudia.
And yes, we will be sending out these emails, the presentation to your emails. So anybody that's actually not in the Zoom platform, if you're in one of the social media platforms, it could be Facebook, YouTube, or LinkedIn, send us an email at info@latinotaxpro.com so we can send you a copy and get you in that newsletter so we can send that out to you. Um, so the residential credit will or will not be available for 2025.
It will not after 2025.
Okay. Says, what was the one about affecting teachers?
Oh, the couple things on the 529. Some of those distributions can be used for credentialing, and there's some other expenses that can be used for the 529.
Okay, thank you. And then, are there any changes in credit for dependents, child other with ITINs?
Yeah, what's going to happen now is there needs to be a social security number for the child and for the parent.
And just for those that didn't hear the email, thank you. It's info, that's info at latinotaxpro.com, just like our website. I will also add it to the comment section so you can submit your request in there as well. Um, and these changes, are they effective for 2026?
Some are, in fact, most of them are, and some are effective for this year, 2025.
And then here's another one. Can you specify more on the car loan payment interest deduction?
Yeah, up to $10,000 of eligible car loan interest can be deductible if you itemize or if you don't itemize. And we don't have the exact details yet, but that's what we understand.
Yeah, so we'll do two more two more
Okay.
questions because we're getting up until to our allotted time. Thank you again, everybody, for tuning in today. And it says here regarding ITINs, are both taxpayer and spouse required to have ITIN, or will mixed status families be able to claim the credit?
The way we read the law, and we'll get some clarification on that for you, was that one parent must have a social security number and a child must have a social security number. We don't know about mixed status yet, but we certainly will.
Here's an interesting one. Does commission count as tip also?
I knew it. I've been waiting for that one.
That one that was asked
No,
by Vince. No, just kidding.
no.
So, okay.
Remember, it has to be in a business that normally uh, customers give tips to the employees.
Yeah, so that email again is info at
Yeah,
latinotaxpro.com.
it'll be on
That's
the
I,
next one. Yeah.
yeah, it'll be I as in India, N as in Nancy, T as in Tom, I'm sorry. What am I? I'm spelling introduction. I is in India, N is in Nancy, F is in Frank, O is in Oscar at latinotaxpro.com. But if you're here on the Zoom platform, you don't have to worry about it because we have your email address and we're going to be sending it over. That's all the time we have today. I know there's still a lot of questions that are coming in. We are going to be doing more of these, so stay tuned. We're also we're working with collaborators, so stay tuned to see who's going to be joining us in these webinars in these series. There's still a lot to do, a lot of information to break down. This was barely even a anything, right, Mr. Lopez?
This
It's
was
more of an
just a
overview.
drop in the bucket.
Awesome. So thank you everybody again. This is all the time we have for today. Thank you for tuning in. Please expect that email. Subscribe to our newsletter. So if you haven't, you can
Hey,
go to our
Randy.
page.
Hey,
Um,
I just want to give a shout out to Randy. Thanks, Randy.
thank you everybody. And Mr. Lopez, any last words before we head on today?
I'm really glad so many of you showed up today to listen to this. Vince and I and our team here at Latino Tax Force worked really hard to make sure that we can get out this relevant information to you to help all of you with your tax practices and to be better tax preparers. Thank you.
Thank you, everybody, and thank you, Mr. Lopez, for your time in this presentation. We're looking forward to the next one. Thank you,
All right.
everybody.